Okay, let's get the invitations out. Boom. Will the stock market continue flying higher? Will AI stocks rebound from the recent malaise? Will your favorite AI name go up or down in flames? These are questions we're going to answer this week on Stock Talk Live. We're just waiting for the live studio audience to come in. The veterans, y'all know what it is. Share the invite. If you're new or tuning into the replay, you could just fast forward a couple minutes while we wait for everything to get started, wait for this party to get going. All right. Let's get here. We got everything going else here. Good, good, good. I'm going to double check the audio and video, make sure we're good with that. And then we're going to get started. We're going to have an extra Q&A. Like, we're going to really do Q&A today. I want y'all to ask all the hard questions. This is what I seek to answer in real life for myself. I'm not trying to be right. I want to be on the right side. Right? It doesn't matter who wins the debate. It doesn't matter who's smarter. It matters who makes the money. Okay? So I know a lot of people smarter than me in this world. In fact, that's something that you get taught. Surround yourself with people smarter, richer, more powerful than yourself, because that's the way to elevate. Okay? So we've had some great discussions this week. There are some trolls. Y'all trolls out there, you get insta-blocked. Gone. I'm just not going to deal with it. But those of you who are interested in a professional dialogue and can contribute to that, come on down. I had a lot of conversations with y'all this week. Some good information, some bad information. We're going to net it all out and tell you what it is. Good or bad. That's all I'm here to tell y'all. All right? I'm just here to tell the truth. And that varies from what you get from colleges who rip you off, CNBC, which rips you off, facts. Okay? These are bad institutions. They give you bad habits. What you think about Wall Street is not true. Because if it was, you'd be a millionaire by now, making millions by now. Why are you not in the 1%? Because you believe and operate like the 99%. I'm here to break you out of that. Why? Because my mentor did that for me. Took me out of the matrix, unplugged me back of my head from the machine, and took me on the Nebuchadnezzar. And I'm here to take you on that same ride. And by the way, we now have enough people in the audience for me to say, it's Money Mark. It's Friday. It's Stock Talk Live. We got a big show. Constructor, what's up? Daddy, what's up? All y'all that's in the live audience, what's up? Once again, we are not going to deal with trolls. You get banned, blocked from everything I do in social media. It doesn't bother me. I feel bad for you. You have my pity and my prayers for the fact that hopefully in your next life, mommy and daddy will give you the love that you so badly crave, that you need to put other people down and feel good about yourself. It's cool, but not for my show. This is a professional show, by the way. If you're tuning in, you can ask questions in the chat. Start and end your question with a question mark, just like the Spanish do. Why? Because it'll be easier for me to find your questions amongst the myriad comments. And guys, have a good time in the comments section. Give me comments. Why? Because the only thing I ask, no sponsorships, no advertisements, no subscriptions, nothing. This is a pure 2-hour donation from me to you, because my mentor taught me how to go from a loser to a multimillionaire. That's the least that I can do, is give 2 hours of my time to give back to everybody. Love the stories, people becoming millionaires every single month in my community. Love it. All right, we're going to get started though. Well, macro. I usually don't have much to talk about macro. Oh, you know what? Let's start with this. Put it on the screen real quickly, right? If you are listening to this or watching this, you acknowledge these disclaimers, these disclosures, and realize that I can do anything I want with anything I want. It's all written down here. This is a clown show. This doesn't mean anything. It's all for entertainment. And by the way, please hit the thumbs up button, because I'm not asking for anything in return except for you to let people know that there's somebody here telling you the truth about everything, including the ripoff that CNBC and colleges are. CNBC has its place, by the way. I was watching CNBC this morning because they are great at covering news, but they're also great at making sure that you stay glued to the TV by whatever trick necessary. We're going to bring on a bull. We're going to bring on a bear. That's BS. That's why they're a ripoff. All right? If all they did was give you the important news of the day, it would be a 1-hour show on a network, not its own network. All right, so keeping it a buck. Let's see what we got here. We'll skip over this. In the description of this video and all my videos is a wealth of links, resources of what I do. So you can find me 7,200 followers. We blasted right past 7,000 followers on Twitter. You can find me there. Here is my credentials going way back. 3 things to look for in somebody you listen to on the internet. Out of the 10,000 jokers out there, a real name, real credentials, and a real-time tracker of what their performance has been. That eliminates like 99% of people, especially the credentials, which you can find on my website here. Read my instruction manual if you're new, which is right here at markhomstocks.wordpress.com. If you don't understand something that I talk about on the show, it's because you haven't read the rules. If you're not making millions, it's because you haven't read the rules. And there's also this video here, which also Making Money with Mark. No tricks. This is just for you, purely for you. No advertising, no sponsorships. You know the drill. All right, let's get into it. We might want to look at this sometime today, but not at this point. But we are doing really well. 45.5% annualized return going back. No losers since May of last year. And it's because we're sticking hard with the rules. We're being very careful about following all the rules. Wall Street, CNBC, the bloggers, the tweeters, they want your brain to be full of ticker symbols. Should I buy Palantir now? Should I short the market now? I don't care about any of that. Why do I care about Palantir when there's literally 100 millionaires in New York City, in suits, analyzing that company to death every day? That's your competition. I don't want that competition. You do not need to play against the big boys to make the big boy money. I'm proof. I don't deal with those stocks. I don't touch those stocks for the most part. I deal with the stocks that nobody heard of before. TSSI, nobody heard of before. Until Maj, Geo Investing, salute to you. Me, being the first person to provide proof that they were an XAI. Stock was $2. It goes to 30. That's how you make millions. Palantir is not going to go, whatever it does next, right? Palantir is not going to go from 150 to 3,000, which is effectively what it would have to be the equivalent of what we saw in a TSSI. Similarly, a TSSI, having already made its big move, we're not going to see that 2 to 20 type move from 15 to 150. It's just not going to happen. It's just not mathematically reasonable to expect out of this company. We are going to talk about TSSI and where it does belong later in the show. But the point being, folks, you want to deal with low-hanging fruit. And that entails getting involved with uncomfortable stocks, unfamiliar stocks. You don't want to be, everybody used to be, oh, McDonald's, GM, GE. Oh, yeah, that, you remember what happened with GE? Look, GE was such a darling, and then if you were in GE, you can't go wrong buying GE. You spent the rest of your life. Just now is GE finally getting to its all-time highs from 25 years ago. That's a quarter of your life if you live to be 100. Stop it. Stop it. You have to deal with future winners, not past winners. And the past winners don't necessarily line up with what the future brings. All right. Fear Greed Index. in greed, but in a safe territory. That's nothing to see here. 2-year yield down today on Jerome Powell's remarks. That is bullish for the market, all else being equal. Let's look at the market. The Qs, let's zoom in, still in yellow alert. Look at that. That's crazy. We hit the top of the red line and it rejected down to the 50-day moving average, now bouncing off of that. This is a very precarious place to be. This is why we're being picky. This is the most important time to read my rules, to watch my video, so that you learn what you're supposed to be doing right now, which is gathering cash. Kraken, right? We got out. Not that the stock collapsed, but the stock has gone nowhere for months since it hit the red line. You could have put that money somewhere else, okay? Drone Shield, same deal, has gone nowhere for a couple of months. You could have put that money somewhere else. TSSI, you already know. Okay. Meanwhile, though, while the Qs are sitting at that red line, the SPY above the red line, IWM, the small caps where we deal, still making its way up towards the red line. So there's room there to move. If we zoom in on the chart, pull that back, what you see is a pattern that we've been in of late. You see that channel right there? This is a sharp move. I would say, all else being equal, if you had money in the Russell, if you have extra stocks that you shouldn't have, if you're breaking the rules somewhere, wait time stocks, and they're ripping today, this is a great time to take profits on those names. Not the good names. Not the names that are still within the rules. You don't want to get rid of your favorite stocks that are at good prices. Okay? I don't want to pay a freight price. I want to pay a bargain price. No fair prices, bargain prices. If your stocks aren't at bargain prices, you want to be taking profits at times like this, and especially the stocks that you shouldn't be in at all. Pull that trigger today. What are you waiting for? Okay? So that's enough BS on that. Let's get into more important things. Let's see what we got. Double check. Oh, yeah, so we got the little market correction, right? So that was nice. The rules had us thin, which is nice. It gave us an opportunity to buy some stocks if we wanted to in recent days ahead of today's bounce. Trolls, once again, if I see you trolling, you're going to get instantly bounced. It's not funny to anybody. Nobody cares. There's adults. It's an adult show. You're not even funny. Doesn't matter. Oh, last thing on the macro. So we got the yellow alert, right? But I've also been telling you this is the most likely time since 1999 for us to get one of these. It's called a bubble, okay? So you got to be careful right now because we're in a yellow alert, but you want to be vigilant in case we get a bubble, because bubbles are very lucrative, which means, again, what I said before, you want to stay in the good stocks at good prices. If you're afraid of the stock market, don't sell your good stocks, short the market. You can short IWM, you can buy RWM, right? If you don't know how to short, you can buy RWM and that will short the market for you. SH will short the S&P 500 for you. You see over time they go down, but when the market gets crushed, we zoom in, you can make a lot of money. What was that move right there? That was a 25% move in SH when the market went down. This is your insurance policy. Insurance will tend to cost you money unless a disaster happens. All right, so keep that in mind. All right, that's it for the macro. Let's get to the stocks. Boom. What are the chances we get a bubble? Man, listen, there's a lot of factors that go into it. That's why you have to remain vigilant and just stay in the good stocks. One good stock, Gatekeeper, all right? AI beneficiary, you're seeing them winning more and more deals as their systems used to be just like a camera company. Now, the camera footage gets incorporated with AI, and now they can monitor what's happening inside and outside a school bus to save lives. Idiots driving around stop arm, right? The bus stops, the stop arm comes out, some idiot goes driving past the stop arm and hits a kid and kills them. I've seen those stories. It's heartbreaking. Okay? These cameras help to prevent that through enforcement. giving heavy fines to anybody caught doing that, keeping the kids safe inside if a fight breaks out, etc., etc. We're seeing more and more and more of this happen in this society. Just another win here. Nothing big, but they used this press release to highlight how big the opportunity is, where in just the state of Florida, there is, oh, I forgot what it was. It doesn't even matter because you have to know the math. But here you go. Gatekeeper has provided solutions to more than 60 transit agencies, more than 3,500 school districts throughout North America, and installed more than 57,000 data collectors. They call them cameras. They're data collectors now because what do cameras do? They collect data. That's what happens with these LLMs. So nice move for news for Gatekeeper. Nothing great, but just throwing it out there. Before we get into AI deeply, and I do want to answer all your questions about AI, about TPCS, TSSI, and anything else you want to discuss today. It's just kind of a little bit of a special episode from that standpoint. I will answer any question today, but first let's deal with news. One of our key names, TPCS, I gave you this one when? Look at the green line. Look at the beautiful thing. Look at that thing of beauty we've had, right? Stock's pulling back a little bit today. That's fine. No big deal. I'll give you the analysis that other people probably didn't get, sparking some of this sell-off. But we've had a tremendous move. Off of that circle, the clear out trade that I did, I bought out a large seller. Okay? Dude was out in the marketplace, hundreds of thousands of shares, sold it off. Hundreds of thousands of shares here were sold off. And what did I tell you? Get your notebook, get your pen, write it down. Clear out trades are massive for a stock because generally speaking, people know that there's a seller out there. When the seller goes away, stock takes off. That's what we had happen here. That's what we had happen here. Stock's finally moving. The earnings came out. Not so hot on the top line. Oh my God, must be bad news. Hold your horses, y'all. Don't be dumb. Don't be like those dummies out there. As soon as they see this number right here, they panic, they freak out. Here we go, back down to 7 million. What happened? TPCS sucks. Shut up. How many times do I need to tell you? With your pen not in hand, with your notebook not in hand, that this company is not about the revenues. It's about the bookings. It's about the backlog. And the backlog came within 700,000 of an all-time record after dipping all the way to 41 million. They've amassed almost $10 million of backlog alone. Okay? They don't do 10 million in a quarter. They have added 10 million to backlog in the last 4 quarters. Not a surprise after what I've told you about the F-15EX going to full production, CH-53K going to full production, electric boat expanding, buying a Macy's property so that they can expand their operations so that they can crank out more submarines, of which TPCS makes money off of. Oh, and by the way, on the earnings call, yours truly was on there, quizzing management. They did a great job, by the way. Best earnings call I can remember. Not the most entertaining, but we're not there for entertainment. We were for a while. Now we're there for professional conversation, which management is able to do finally because you, me, we, not as a group, as individuals, that would be illegal, voted those idiots out. Dummies get shot. They got shot, and since then the company has only done better and better and better. You can see it in this backlog number. They're getting more and more orders. $42 million of bookings over the last 4 quarters is far in excess of the $33 million in actual revenue recognition. That's why it's so important to look at the bookings, because the bookings tells you more about what the earnings, the revenue is going to be in the future. Okay? That's why that's critical. Gross margins up. That's what we want to see. Why? Because when I go into my model, come on. There we go. Actually, this part of the model, or yeah, this one right here, right? I figure out how much money they're going to make on the top line based on the government programs they're in, based on how much they get per program, multiply those two numbers together. It's not rocket science, and you get a revenue number. Well, now we have to take the expenses. Well, a big part of the expenses is the cost of goods sold. So the gross margins, like I told you, is going to be the key here. It's the difference. You see, look, if they get stuck at this 12% gross margins from last fiscal year, look what happens. I put in a 12 and their EPS goes to negative 5 cents. But if they can get that up to 20%, it goes to positive 33 cents. If they do 33 cents in earnings and their revenue growth is this high, the stock is liable to go to 10, because the next step after this is for them to put up $1 of earnings. They put up $1 of earnings, the stock probably goes to 15. They go to $1.50 to $2. Stock can go to 15, 20, 25, 30. They probably get acquired before this even happens. But this is just based on government programs that they're having in play. All they need to do now is to continue to improve their gross margins as they have been doing, and it's off to the races. And as you see here, the stock has been getting attention. We saw institutions on that call. They were positive. I spoke to some of those folks after the call. They were positive. Everybody thinks this was like the best call we've had in a long time. So boom, there you go. And that explains why the stock is only down 5%, just taking a little breather, consolidating back to maybe one of its moving average lines, despite the fact that the headline number, Mark, 7 million, it sucked, the quarter sucked. No, the quarter didn't suck. You suck at analyzing quarters, because you didn't understand what was important. Let's see, final notes on this. So we got revenues, orders, backlogs, margins, minus, plus. Strong CFO was on display. They finally have a real CFO. If you listen to the call, if you own the stock, I'd watch or listen to the replay. It's out there for you to have, right? They are intent on renegotiating any contract that's not wildly profitable for them. And guess what? They can do that because they're the only ones that produce those parts, okay? So they're in a strong position on the negotiations. They're also looking to expand. I asked them the question, okay? So this model is only based on what the government wants to order over the next few years. What it doesn't include is what we don't know. What new parts will they produce in the future? What new programs will they be involved in the future? We don't know. So I asked them, and they believe that in the coming years, they could get 33% of their revenue from new parts or programs. Well, that would mean I would have to increase these numbers by 33%. Actually, I'd have to increase them by 50% for the new programs to represent 33% of their revenue. If you got 2, well, if you got 3 and a third is coming from these programs, right now you only have these 2, but then you're going to add this one, that's a 50% increase for this to become a third of your total. It's a little math probe. All right. By the way, those of you just tuning in, we're about to get into AI, just taking care of housekeeping, which is the TPCS earnings. So that's positive there. Final note, I told you about Electric Boat. They're at full capacity, buying that Macy's property. Also full capacity in terms of production. So that creates an opportunity for TPCS to help Electric Boat by taking on more of their manufacturing, given that they are full on. So I showed you the model, so we're done with that. Good enough. If you have any questions, put them in the live chat. Put a question mark at the beginning of your question. We're going to close this out. We're going to get into AI. We're not going to start with Dell and TPCS. We're going to start with, one more piece of news that's non-AI related, but really quick. For those of you who own CTLPP, remember CTLP? Buyout, money mark pick, acquired, okay? Decent buy right now, by the way, because they're going to get acquired for more than $10.88. I don't own any CTLP anymore, but I do own CTLPP, okay? In fact, CTLPP is currently my largest position. Why? Because at the current price of 60 bucks, it is trading at a roughly 4% discount to its full value, which is probably going to be unlocked inside of 2 months. All right. Mark, who cares about 4%? Well, I do. And here's why. Because money market funds are currently paying 4% per year. CTLPP is paying 4% for 2 months. And the only difference is that a money market has basically zero risk, and CTLPP has the risk of the deal falling through. But I've seen these deals a million times, and 999,999 of those times the deal has gone through. I've been monitoring this deal closely, and what I have seen in this process is that there is no rejection of this deal. There's no opposition to this deal for CTLP being acquired to go through. And in fact, in 3 weeks from now, there's going to be a special meeting of CTLP shareholders. They are going to vote in favor of this acquisition. The acquisition will go forward, conclude about a month later. So in 2 months, CTLPP shareholders will get their 4% return. And what does that equate to? This right here, this formula right here, to the power of 6 minus 1. And then we take all of that and multiply it by 100, and you get a 26.5% annualized return for a super low risk, super high probability bet. That's why it's my largest position right now, because I don't know where else I can get 26% annualized in a yellow alert without taking much higher risk than owning CTLPP. So that takes care of that. All right. Let's get into AI. I like this chart. And I like this company. Do I love this company? Not yet. We're still working on it, right? But I continue to gather information on Tecogen, TGEN, okay? Put the model together for y'all. I shared it last week, okay? And what we are finding is that three things. 2 positive, 1 not so positive. Let's go through them real quick. And then we get to TSSI, and then we get to your questions. All right. Number 1, industry expert. By the way, for those of you who want me to feature your idea on Stock Talk Live, stop pitching me. Stop pitching me. I delete, unless your idea includes data from independent, third-party industry experts, okay? Guess what? Morgan Stanley, sorry for the baby in the background, babies cry. Morgan Stanley is not an industry expert. They're a Wall Street firm. I am not an industry expert. I'm an equity analyst, okay? Jim Cramer's firm paid me for stock picks, not my industry expertise. For that, I went to other people. I went to Gartner Group, Forrester, AMR, who I used to work for, who hires industry experts, people who have been in the industry for decades and know the difference between something good and something not good. And we've got industry experts confirming that what Tecogen provides is, quote unquote, from one of them, special. Okay? Not a big surprise because Vertiv, VRT, partnered with them. What I tell you about not really loving VRT at these levels, everybody loves Vertiv, so why should we play with it? Everybody knows Vertiv, so why should we play with it? Now you're dealing with a stock that everybody knows, everybody's playing with. Oh yeah, can the stock go up 30% next year? It could, or it could go down 10%. Could it go up 50%? It could, or it could go down 5%. Doesn't excite me. I want a company, I want a stock that could be a 10 bagger, a 5 bagger. And if I lose 30%. No big deal, because if you lose 30% in one hand and you triple your money in the other, you've made a ton of money. This is the game we want to play, not the game where we're trying to make an extra 50% on a stock, maybe, because everybody knows it already. It's picked to death. Everybody knows everything that's going on here. We want the lower hanging fruit. Tecogen is lower hanging fruit. They have a good opportunity. They have a joint development deal with Vertiv in place. By the way, I don't own a big position in Tecogen. I've started a position. I have, ownership in the stock, but it's not big. So here I am sharing you this information and don't have a lot to gain from it. But that's what I do. I do research and I share it with y'all on Fridays. Okay. So that's good. There's joint development. There is special technology there. There is IP. There is patents, things like that. The only negative that came out of this is the notion that we're probably looking at a few more quarters before you get the kind of momentum that leads to revenue growth. Okay? So there's deals going on. There's negotiations going on. There's evaluations going on. We're hearing about all of that. But we got to get through that process to the point where Tecogen actually delivers product to a customer who evaluated the product, negotiated for the product, signed a contract for the product, and said, here's my delivery schedule. Please send it on this date. Tecogen sends it on that date. And on that date, that's when they can recognize revenue on it. Okay? From what I'm understanding, that could be, let's say, 2 or 3 quarters from now. Okay. In the meantime, we're going to continue to hear more news about them. Momentum. I'm going to continue doing research and try to find more independent third-party industry experts, which is the requirement if you're going to send me your pick. And then we'll have more confidence in the future of this company, just like I did with TSSI. What a segue. Okay. Listen, here we go. This was a heck of a week. All right. We are going to discuss this like ladies and gentlemen. You trolls out there will get kicked out and not participate. You non-trolls can ask me any question. It could be a hard question. Just be respectful. Mark, you said blank. Do you really believe that? Did you check that with management? That's fine. I don't mind hard questions. Don't you think you're just trying to make the stock go down? What are you, dumb? This is not stock twits. This is not elementary school, which maybe you still belong in. Okay? This is the real world where real money is being made by real professionals who actually know what's going on Wall Street. Not the BS they give you on CNBC. Not the BS that you hear about out there on the chat rooms. That's all BS in the grand scheme of things. Warren Buffett doesn't care about any of that. Okay? He's up there in his castle looking down laughing at y'all, just like me. I'm up here at my castle, penthouse in Miami Beach, laughing at y'all. Not really. It's sad to me because I used to be like a lot of y'all. Not all of y'all. A lot of y'all learned. A lot of you bought your pen. A lot of y'all bought your notebook. A lot of y'all have learned how to become better investors by learning the real, by getting that plug pulled out of the back of your neck. Neo in the Matrix. Okay? We're talking about the real here. We're going to have real discussion about this. I'm going to answer real questions. So first of all, those of you who think I tanked the stock, BS. Did I contribute to the stock going down over the last week? It would be unreasonable for me to say no, right? Because I came out and put forth a more negative notion about this company than was the general consensus. And now the general consensus, right? The general population is thinking twice about this company, which they should have been doing in the first place. All right? But bigger contributor, in my opinion, was the raise they did. Okay? I'm not that powerful to make a stock go down day after day for a whole week. No, especially a company with a $300 million market cap. All right. What was this? This was the raise they did. They issued like 20% of their shares in an overnight offering to a bunch of investors that hadn't been pre-prepped. That's generally speaking, flippers. I'm not going to say it as a matter of fact because I don't want to be sued for stating something as a matter of fact. My 30 years of experience tell me a company that has real institutional interest. Here's how it works, right? In the big brackets, which TSSI, I'm not going to hold it against them that they didn't attract Morgan Stanley or Goldman Sachs. No. That's not a problem, right? But if they did, Morgan, Goldman might initiate coverage, take them around on what's called a non-deal roadshow, get investors to understand the company, get to know the company, whet their appetite about the company, make them want to buy shares in the company to where they say, hey Goldman, hey Morgan, how can we get more shares of this company? It's really hard to get the number of shares we want on the open market. And then when they do an offering, those investors line up. Those investors who want to hold the shares. Not an overnight deal with no non-deal roadshow ahead of time, with investors who most likely are mostly flippers. I know flippers. A good friend of mine, two of them in fact, are flippers. They get called by the investment bank, a low-tier investment bank. Sorry guys, my opinion, you can't sue me. Low-tier investment bank goes out and their only job is to find a bunch of guys willing to buy the stock at a discount in hopes that they can quickly flip it for a few cents profit. So what do you think happens as soon as the deal's over? The stock's at 18, they do the deal at 17, and the flippers start flipping. But what happens when there's so many shares issued as part of the deal? The stock keeps going down because there's so many shares for those flippers to get rid of. Okay? So did my analysis contribute to the decline? Probably. But did the size of that offering and the quality of the investors involved contribute? I have no doubt. Let's get that out of the way, just so you guys understand how Wall Street really works. Now, let's get to the update. Right? Let's get to my update. By the way, part of the reason I dropped that bombshell, and by the way, the bombshell was not the picture. It wasn't that Dell has a factory. We've known about the factory I lived in Franklin, Massachusetts. I've known about the Dell factory for well over a decade. Okay? Decade. 3 decades. That used to be an EMC facility. Okay? I used to know the E in EMC. Dick Egan, God rest his soul. Okay? Been to his house. So that is not the bombshell. That was not the bombshell. The bombshell was how the earnings call went and my analysis of that earnings call in the context of the raise that they did, combined with some additional research on the capacity of the Dell facility as it stands today, based on the work that they did to ready that facility for optimal AI rack integration work. Which, by the way, the bulls that came, some of them professionally, some of them aggressively, when I hit them back and said, do you know how many AI racks Dell can crank out of Franklin, Mass? Crickets. Okay? That's not me taunting y'all bulls, because I'm neither bull nor bear. I'm a neutral party just telling the truth. But if you're going to be a bull, you better damn well know how much capacity Dell has. Because this is not the actual number, but what if Dell can crank out 1 million GPUs per quarter? There's nobody taking on 1 million GPUs per quarter from Dell. So that's 100% of their order book, which means there's nothing left for TSSI, which means technically TSSI could get zero business. And if there was zero business for TSSI, Dell, with 180 days notice, can cancel their relationship with TSSI with no recourse. Despite what people have said, I went over the agreement multiple times, ran it through AI multiple times, and there is absolutely nothing in that agreement that says that Dell owes TSSI anything if they cancel the agreement, except for 180 days of sticking to the agreement. After that, sorry guys, you're off on your own. That's a severe risk. It's a severe risk But what are the chances that that risk comes to fruition? It's like I said, I give you a Powerball ticket. The number's on there, right? And I said, if this number comes up, I'm shooting you in the head. It's a severe risk, but the odds of it coming to fruition are infinitesimal as you winning Powerball, right? That's how I view here, because Dell wants TSSI to be there. They want TSSI to exist. I talked about it on the last two broadcasts, so I won't remake the chart that I made, but TSSI is unquestionably Dell's overflow valve. Okay? Let's make no bones about that, right? But they are an important overflow valve, so there's business to be had there. Can you grow as Dell's overflow valve? Sure, because as Dell grows, they're going to want more cushion, a bigger overflow valve. But they're the ones that are going to be in control of that, unless and until TSSI acquires new customers, new partners. And that's job number one for them. And it has been job number one for them from the beginning, from the first conversation I had with CEO Daryl way back here. Okay? They've wanted to expand beyond Dell. But here we are, a full more than 1 year later, and they haven't been able to do that yet. Is the raise partly due to that? Maybe. Some people thought, well, they have these, and I'm not going to explain this to you. You can look it up, use AI, Google if you want, factoring. Right? Because you have this big procurement business and they owe money, and it's a huge chunks of money that TSSI has flowing in and out. And so they use factoring to finance that part of the business. And it's not cheap money. They pay a decent interest rate on that factoring. So, well, now that they've got this big war chest of $60 million, they can use that for factoring. Well, yes, that's true, but that is not why they did the raise. Management has said so. This past week, not to me personally, okay? I'm not going to disrespect them by trying to have a conversation or request a meeting with them in the midst of me being part of the cause of their stock going down. I wouldn't expect them to honor that request. But I have plenty of friends in the industry who share their knowledge with me, and we got absolute certainty. They didn't raise the money for factoring, okay? But they can use it for factoring, which is a positive. It will lower their factoring expense, which will raise their profits, but now their profits are going to be diluted by more shares outstanding, okay? Is that a positive or negative? It's roughly nothing, okay? Let's see what we got. My best guess, by the way, for those of you who want to keep it in mind, Dell is maybe giving them like $1 million a month of support, either through the business, or if there's no business to be had, they're still going to give them the $1 million. That's roughly my best guess as to what they're providing them with based on the nature of the relationship. Okay. Oh, this is a big one. One of the biggest fears was that with the Blackwell cycle, Blackwell racks need to be OEM certified. What does that mean? The OEM is the original equipment manufacturer. Dell, Supermicro, HP being amongst the most notable. TSSI is not an OEM. Okay? Therefore, the fear was that TSSI, not being an OEM, couldn't certify Dell branded racks. Well, from what I understand, they can either directly or indirectly, so that that OEM fear that I brought up as part of the show, some of the fears of the bears, right? Not a problem. I see that as a non-issue. See, and like I told you, I'm here to tell you the truth, not to leave anything out, right? That's a big positive to me, because if there are shorts out there that were shorting the stock because they thought that the OEM certification was going to eliminate TSSI's role in Blackwell racks, guess what? You're wrong, Jack. Your short thesis has just been blown out of the water, okay? You shouldn't be short for that reason because I don't think it's true. We talked about the relationship with Dell and the nature of that. We talked about how TSSI must diversify. The raise might go towards that. I still think the raise was too big and done with the wrong firm and done with the wrong number of firms. You're going to get one company issuing a analyst report on your company, giving up a quarter, near 20% of your company to get one analyst firm to initiate coverage. It should have been 2 or 3. Okay? It should have been better. It shouldn't have been a flip. 20% of your company going into the hands of flippers, pressuring your stock, in my opinion. Okay? You're not going to get me off of that soapbox. That was, I'm sorry, that was not a good way of doing things. There are other firms that could have helped you do a better raise and provide you with analyst coverage that you really need, because there's none out there. And you guys, and listen, I'm not going to blame you. I love Daryl, I love Dan, and I'm sure they're telling us all they can. But this is the problem. Because what they can't tell us creates uncertainty, and you cannot invest in something if you cannot get visibility into the business. You need visibility. They're not giving it to us for whatever reason. I don't think it's 100% by choice. All right? So the raise it sounds to me like the raise is made to expand their business one way or the other. Maybe make an acquisition. I hope not. Because in this industry, you expand by building a facility, hiring people, which is easy. They have the executives. Their COO is a rock star, in my opinion. TSSI's COO. So they've got the pieces in place. They know how to build a facility. They got a chief operating officer. It's easy for them to hire. By the way, their HR director, also a rock star, so they can hire people easily. So why would you go and acquire people when the only thing missing out of that equation is get a customer? Just go out and convince somebody to do business with you. That's the only reason you would go out and acquire another company and pay them a premium for doing the job that you couldn't do, getting a customer. And by the way, Daryl, CEO, his background is in sales, decades of sales. Dude, go out and sell. So the only thing I can conclude is that they got this money because they want to build another facility that Dell doesn't have any say in, so that they can fill that facility with a new customer's business and expand their customer concentration risk beyond Dell, right? Because Dell could literally make them go bankrupt like that by canceling their agreement on 180 days notice. That would be very, very bad for TSSI. Now, I don't think they would go bankrupt. I think they would find other people to let them do work and start filling out that facility. But it would be, listen, that would be a very dicey 6-month period. Trust me, okay? So it is important for them to expand out. Maybe that money is to build another facility to attract more customers. But this facility cost them $30 million. Why they need to raise 60? Why didn't you just raise 30, build the facility, get the customer, watch your stock go through the roof on that new customer, and then raise another 30 if you want at a much higher than $17 price? That's got to be disappointing to anybody who owned the stock at 20, 25, or 30. That the company itself was willing to sell so many shares at $17. Over 3 million shares at $17. That's the ultimate insider sell. Literally, right? So I don't like that. Couple more things. On the positive side, let's go back to the positive. Q3 and Q4, I've said it over and over again. Okay? Good question, Sharktooth. Where are you getting 20% of the company for dilution? They did 3 million shares and had 25 million. That's 12%. That is correct. By the way, it was more than 3 million shares, right? Because they raised 58.3 million. So let's get the numbers right there. You get the numbers right. I'll get the numbers right. But correct, right? Somewhere between 12 and 20 is the actual number. This is what I love, right? I'm going off the top of my head. By the way, for most people, it doesn't matter, because do you know the difference between 12% dilution and 20% dilution? No. It's a lot either way, right? It's a lot either way. 12 is a lot. 20 is a lot. Somewhere in between is the actual answer, Sharktooth. Thank you very much for that comment. Love that. That's how you do that. Q3, Q4, I've said it on each of the last 2 calls. In case you didn't hear it, because you were too busy fixated on the negative, I expect a strong Q3 and Q4. There is a big backlog. I've been saying this. I've been the champion out there. This is not a bubble. As soon as Blackwell gets over its yield issues, things are going to blow up for Dell and TSSI. Remember that? That was me who said that. I haven't changed my mind. It's actually happened, been proven true. Dell's backlog blew up just like I told you it would, right? Dell stock is doing well like I told you it would, even though I'm not interested. Don't own a share, because what do I care about making 20% profit on Dell? I earn 40+% per year. A 20% grower, a 30% grower is a drag on my annual performance. I don't want it. It hurts me. Okay? Considering the risk involved. Yes, I own CTLP and money market that's earning me only 4%. Mark, why would you only take 4%, you idiot? Because there's not the risk involved that the market tanks and takes Dell down 10 or 20% with it. So yeah, Dell can go up 20%, but it could go up down 20% also, given that we're in a yellow alert. You don't want to play with these companies if you want to make the kind of money that I make. If you want to, that's fine. If you have retirement money, you want safe returns, okay. Dell is definitely a safer investment than a TGN or a TSSI. Otherwise, we're trying to be millionaires. We're trying to make millions per year. This is how we do it, okay? Now, let's get back to it. Q3 in particular, okay? Because XAI, Elon Musk has already said he's taking delivery of tons of GPUs in the coming months. The coming months are now, right? July, August, September. That's TSSI's Q3. Do you know what else is Q3? The government year end. So the government, with its year end occurring in September, is usually a great time for TSSI because of their involvement with Dell Federal. One of the most prominent federal businesses there are, okay? So we've got positive quarters coming up in the midst of all this uncertainty that I've been bringing up. So what does that mean for the stock? I don't know. I'm not God. But what I do know is that the stock is now sitting at its 200-day moving average, right? Has two probably strong quarters coming up ahead of it, right? In the meantime, do I expect the last negative to come to fruition, which is margin pressure? No, not yet. Because there is such a backlog, there is so much more demand than there is supply, it's going to be hard for margins to be pressured. But let's talk about margins. When TSSI does rack integration, their margins are like 45%. That has always struck me as being a high number. And they've maintained it. Maybe they continue to maintain it. I have my doubts because rack integration is not rocket science. In fact, when you have margins of 45% in an industry like rack integration, which I feel like something closer to 20 or 30% would be more appropriate. When you make that much, you might say it's bullish, and it is, until it's not. Because when you're making that much money doing rack integration, what are you going to attract? Competition. And that's what we have going on. And so the work that I did this week not only reinforced that I expect a strong Q3 and Q4, not only that their OEM certification can be done, right? Positive things, but also the negative things, not being able to reconcile why they did that raise, and also that Foxconn presence in Mexico, close to Texas, right? Literally, figuratively, Mexico on the U.S. border, Texas on the U.S. border. Foxconn, big company, used to working on low margins. Ywind, Inventec. Speculation that CoreWeave and Lambda might take on more systems integration for themselves. Okay? So as this market evolves, you're going to see these aggressive competitors come in, and it's going to be challenging, I believe, just my opinion, being real, for TSSI to maintain those high margins. Now, the good news is they should continue to grow as Dell gives them more business, as that release valve needs to be increased to go along with Dell's increasing business. So what's the bottom line? What's really funny, and by the way, I did listen to the call many times and got input from many professionals, institutions, as well as you retail investors that do a great job, and some of you do a great job. Bottom line is, I'm not moving my risk reward lines. And for those of you who don't know what that means, that's very important, because these risk reward lines are the absolute key to how I've made my millions. Okay? I work hard on the lessons that I was taught by my mentors on how to build these risk reward lines. Doesn't look like much to you, but you try to build them. You can't. You can't. Okay? It took me over a decade, full-time work, to get to the point where I can draw these colored lines. Not these white lines. These are technical lines. Any moron can draw these lines. It's just connecting the dots. It's just encapsulating movement into a channel. See? We'll draw a line over the tops and draw a line over the bottoms, make them parallel. That's our channel. Technical channel. No offense, Dougie Fresh. I love you to death. You're really good at what you do. Very few are. Okay? But anybody can do this. I did it. I'm no technical expert. But these colored lines are proprietary secret sauce that less than 1% are capable of building out there as far as investors go. Right? And I'm not changing these lines. And what you see here, especially if we make it arithmetic, and then blow this out. Come on. There we go. You'll see that on an arithmetic basis, which is, I like to look at risk reward on an arithmetic basis. You got to keep your charts logarithmic. But on an arithmetic basis, you get a better sense as to where we are within the risk reward channel. Right? Because can the stock go down to 5? It could. Highly unlikely though. So you got to pay attention to that. Could it go up to 20? It can. And it wouldn't shock me at all. So I wouldn't call that highly unlikely. So, you know, a pullback, if the market pulls back to 10 or the market does okay, could it go to 20? So you got roughly 5 down, 5 up at this point. If you probability weight the range of possibilities, okay? With maybe the tiebreaker being the technicals, being that we've gotten to support the 200-day moving average holds. We've got something here with Q3 and Q4 looking good. That's not how I operate, right? I'm not trying to make bets on quarters and which way the stock's going to move. I place investments on risk-reward opportunities. I want more risk-reward than that. Okay? I want a stock that's further down in the channel. Operating on all cylinders, yes, they are. Right? But there's also risk involved with that. But the bottom line is, if you like this company, there's no reason why you should stop liking this company at these levels. I think this is, if you like TSSI, if you like what's going to happen over the next 2 quarters in terms of Blackwell adoption and TSSI's role in it, I think this is a fine price. And I think that by now, the dust should have settled, and you can see it in the volume here, decreasing volume. So the stock's been falling on decreasing volume. That tells me that the flippers are probably out of the way on those shares, right? So now we got the dust sort of settling here. You see, balanced analysis of what's going on. But keep in mind, and I hope you had your pens and notebooks out through this. Very important. 2 of the most important tools in becoming a millionaire is your pen and notebook, so you can jot down every data point and review them and decide which ones are important, which ones are not, and not give extra weight to the recent data points. That's called recency bias. It's a mistake. Confirmation bias, also a mistake. Look those up. All right, let's go to Q&A. I think we've covered it. I will answer any questions about this. Put plenty of question marks so I can see it over the comments that come in. All right, let's have a discussion. I will show you any chart you want to see. I will talk about any company you want to talk about. We're just before 3 o'clock, top of the hour. This is the way I'd like it to happen every week. We don't quite get there, but this week we do. Let's see what we got. Hello, hello, hello to all the hellos. MBJ, happy Friday from Denmark. Yes, sir. Hey, dude, well done. MBJ is been in this chat for quite some time, and in the beginning he would get the dummy treatment, didn't know what he was doing. I can tell that MBJ has read my instruction article here, has watched my instruction video here, which is not for me, it's for you. There's no sponsorship, no advertisements, there's no tricks. I made these for you. It was a few hours of my time so that I wouldn't have to explain it to people over and over. I've got hundreds of family, hundreds of friends, right? And I can't be spending that time explaining to them, even though I love them, individually over and over again, right? So I built this out for them, with them in mind and with you in mind. So I can tell MBJ that you have been checked, that you've checked those things out and you've become a smarter investor. Hopefully you're seeing more success. A lot of people are. All right, let's get to the questions. I just wanted to reinforce that right there. How do you assess the trustworthiness of Intermap management in delivering on their guidance and EBITDA margins given their optimistic projections? Well, who says those projections are optimistic? Realistic is not necessarily optimistic. Realistic can be bullish, right? But it doesn't have to be optimistic. Optimistic means you're being an optimist. You're hoping things go better than expected, okay? Here's what I'll tell you. So far, they've delivered on what they've promised, all right? Let me see here. There you go. All right. And 28 years of experience in the geospatial market. All right. Pat does not want to blow that reputation. All right. So, and he's done a really good job since becoming the CEO of Intermap of guiding the company and actually gaining value. ATMSF. This is AI, by the way, guys. For those of you who are like, what the hell is Intermap? I'm getting out of here. This is an AI company, folks. You know how those LLMs are trained on website data, Twitter data, music, video, etc. They also have to get trained on map data. And Intermap is like the preeminent force in the form of map data that they create. And that's why this stock has been a big winner, and I mean a big winner in our portfolio, up 450% since initiating coverage just over a year ago. And it remains well below the risk-reward top in terms of their potential to continue moving forward. Why? Because they've just got it started, really, in terms of taking advantage of the AI-based opportunities out there. Indonesia being one of them. A $200 million project with the country of Indonesia. Indonesia is not the United States. It's not China. It's not a massive country. It's a big country. But it's not one of like the big 3 or the big 5 countries. And yet that's $200 million. That Intermap is in the driver's seat to win a majority of that business. They already won phase 1. And to answer your question, good sir, right? Indonesia needs that project completed, phase 1 of the project completed. And it sounds to me, based on what Patrick has been saying, is that the scheduling of the completion of that project is the back half of this year. So he must know to give out with confidence that he's going to meet his guidance for the year, that they are scheduled to complete phase 1 in the back half of this year. Not to mention other projects that are going on, right? Because it is said that Elon Musk companies are talking to them. Other AI companies need this data. The United States government is dealing with them. So there's a lot of business to be had that they're working on, and they feel like there's a lot of avenues for them to meet that guidance. Does that mean it'll happen? No. But am I questioning Patrick's integrity at this point in time? He hasn't given us any reason to. Okay, so let's stay tuned. Let's see it. As long as things don't seem fishy, there's no reason to freak out because the opportunity is so huge, and I can't find anybody else out there that is as well positioned as Intermap to take advantage of these mapping opportunities going on in the world. And by the way, I've told y'all in the past, for those of you who haven't heard this before, I listen to these podcasts with these, the bigwigs, the big venture capitalists that invest billions of dollars in the next unicorn. And they're talking about the 3D Earth as being one of the next frontiers for AI. They want to be able to digitize the Earth in 3D format and put that all into their AI models. That means they need to acquire that data from somebody. And Intermap is as good a position as anyone to be that someone. Great question. Let's continue. And yes, give me that thumbs up. Thank you, Shay. Making sure people are giving me that thumbs up. If you appreciate that there's somebody here who's made his millions, who doesn't have to be here. I've got a Miami Beach right outside the door. I've got a penthouse right here. I could be on the roof deck. I could be on the beach. I could be on my balcony. I could be on that balcony. I could be on that balcony. And I could be one of the other balconies over there. Multiple balconies. Roof deck. Pool. Jacuzzi. Ocean. I'm just here for y'all. All I ask for is a thumbs up. If you can't give me that out of spite or something or laziness, I mean, that says more about you than anything else. And your odds of becoming a millionaire, because if you don't have it to press a button, then you don't have it to become a millionaire. I'm sorry. You just don't have the discipline. And I'm not trying to shame you into it. I don't really care at the end of the day. I don't actively promote this channel. If I did, I'd put some money into marketing. I just ask this because I should ask for something. All right, let's keep going. Wrote down in my notes from your talk that IDN offers a protection layer only they can provide. Can you explain how IDN offers this exclusively and why the DMV does not work with other companies? My friend, what you want to do is go to my blog site, okay? Because on that blog site, this is the first article you'll find. You want to read that no matter what. But I think 2 articles down, there we go. 3. IDN's unmatchable competitive advantage. The answer's there, my friend. Next. We got a lot of comments in the section. I'm skipping over comments for question marks unless somebody flags it as trolling. I will read all the comments after the show. Thank you. Geodrill put up record numbers with just 72% utilization rate and will be increasing utilization to full utilization by the end of September. Thoughts on the impact to model, including increased labor costs? Okay, let's be clear about something. I love Geodrill. I own Geodrill. Okay? The stock is pulled back. Buy the rumor, sell the news, right? The back half of the year is seasonally not their strongest time of the year. So, people want to go away for a while. Okay, cool, right? But as far as full utilization by the end of September, let's be clear. They are never at 100% utilization. 72% utilization is actually very close to what we call full utilization, because at any point in time, they have to have some of their drills in maintenance. They have to maintain these drills, make sure they continue to operate at industry high standards. This is one of the attractions. The reason they get so much business is that their drills pull more gold out of the ground than the competing drills, partly because they have their own in-house processes to keep those drills in tip-top condition. So while I remain bullish, and I told you, as long as gold remains above this line, gold would have to drop. Come on. See the box over my head? 36%. Gold would have to drop 36% before I even start to be concerned about the growth prospects for Geodrill. They are growing very rapidly. They've been accelerating in growth. So that's all positive. Let's just not get over our skis and think that the revenue is going to go up 30 something percent because the 72% utilization is going to 100. It's not. All right. See. And the labor costs, increased labor costs, you can expect them to pass that on to customers. Okay, they're gonna defend their margins as much as humanly possible, and they have some advantages to do that. Clearfield chart. I love the CEO, Sherry Baranek. I haven't spoken to her a long time. Why haven't I spoken to Sherry for a long time? Simple. CLFD. Well, it's much lower now, but the market cap, 450 million. It's not low-hanging fruit. I prefer market caps of 50 to 250 million. All right. Clearfield at 450. The stock at one point was 4x what it is right now. The market cap was closer to 1.5 billion. Not so interested at those levels, especially with all that excitement. And look, you see what happened with these risk-reward levels. So no matter how great a CEO Sherry is, love her to death, she is just as susceptible to risk reward as everybody else. And that happened. There was an oversupply in the industry, and then they had to digest that oversupply, and that is now being digested. You see what's going on here. I would expect before too long that Clearfield will start to do well again as a stock. The company has already started to do, they found positive footing. So there's the comments on Clearfield. Also an AI play technically because of the expansion of internet throughout the United States needed to take full advantage of this. Tells you everything you need to know about the question that you just asked. It's all about risk reward. That's basically my tagline. Money Mark Gomes. It's all about risk reward. Okay? And what is the personification of risk reward in the money mark methodology? The risk reward lines. So the risk reward lines tell you everything you need to know about a company's valuation given a certain level of execution. Evolve is operating on all cylinders. But the chart is maxed out as if the company is operating on all cylinders. So the company's execution is matching the chart. And that tells you all you need to know. There's no bargain here. I have a question about risk reward charts. Is a 5 always dead? All right. So look. Oh, is it always dead in the middle of the risk reward? Yeah, nah. So what he's asking is, I used to put yellow lines, but then people thought that meant caution. It doesn't mean caution. It meant this is just the middle of the risk reward range. Great companies go all the way to the top. So if you sell in the middle because it's a 50-50, it's a coin flip. It's not a coin flip if the company's operating on all cylinders. Operating on all cylinders means you should be here. Okay? But the risk reward still remains intact because operating on all cylinders doesn't mean that something won't happen to derail those cylinders. Maybe they blow a cylinder. So you have to keep that in mind when you say, hey, they're operating on all cylinders and the stock still has this far to run. That's fine, but keep in mind that you're taking some extra risk here because while you can and should take the rest of those profits that you can get, you shouldn't risk as much money up here as you were willing to down here. If the company was operating on all cylinders down here, I'm backing up the truck because a stock trading this low in the channel, this is 1 or 2 cylinders. If you're operating on all 10 cylinders, but trading like you're operating on 2, that's a bargain. You want to own this stock. That's really what it comes down to. So once you get up to a 5, it doesn't mean anything. What you want to know when the stock is at a 5 is the same thing you want to know when the stock is at a 2 or when it's at an 8. It's how many cylinders is this company operating on from an execution perspective. Okay? And if the company's operating on more than 5 out of 10 cylinders, then the stock is undervalued at that point in time. Hope that helps. If not, go rewatch my video and read my article, and hopefully it helps, or come back next week and maybe ask again. But no, the 5 does not slide up and down. The middle's middle. It just doesn't, it's not so important. How do you keep track of your picks? The waiting period may be months or longer. Thank you. Simple, Gloria. I don't go staring at my screen all day at charts. I don't go looking at every chart. I don't go look at every tick. I'm not staring at my portfolio all day. What I'm doing every day is finding out what's going on at my companies, because that tells me what the stock should be worth. So if I have a conversation with a CEO, that's much more valuable than looking at charts, much more valuable than staring at my portfolio, much more valuable than day trading, right? So I speak to the CEO, and at the end of the conversation, I might say to myself, man, I think this stock should be worth 10 right now, because I do the math. And then I'll pull up the chart. Then I will look at what the stock is at. And if the stock is at 5 and I think it should be at 10, I'm a buyer. So guess what? I eliminate 90% of what most of y'all, now I'm not going to say y'all, because a lot of y'all have been watching me for a while, learning, right? What most of the dummies out there do is stare at their screen, stare at their chart. They're not learning anything about the companies. All they're learning about is the chart. Well, guess what, dummies? When a stock does this, it's because guys like me bought. How do you think a stock goes up? It doesn't go up by magic. It goes up because there are buyers. And why are there buyers? Well, I don't know. Because the company's prospects have improved relative to the valuation. That's why technical analysis works, by the way, because when a stock in negative motion suddenly breaks out to positive motion, and I'll show you here, from a technical standpoint, classic technicals would tell you that this downtrend, you see this? The stock was in a downtrend, and then it broke out of the downtrend. That's a breakout. That's a sign to technical traders that this stock is probably in a bullish pattern now. And what they wait for is a pullback, and then you get in. It's great. You can make great money. Like we saw the breakout, we saw the pullback, you get in, and you make that nice ride 68% quickly. That's cool. But what about what caused the breakout? Could you have been one of the people like me who get in on the stock here? Not before it technically breaks out, but when it fundamentally has the wherewithal to do so here. And instead of making 68%, we're making 152%, 111%. See what I mean? We do different work. Let's keep going. With the stable coin expected very soon and the flush of liquidity expected to follow, would the additional liquidity drive the market upward gradually over a long period? It's hard to say because we don't know what's, well, all else being equal, if we do see banks start to issue stable coins, yes, that's going to be a lot of liquidity, and all else being equal, that should be positive for the stock market. Okay, that could help fuel a bubble. That's the simple answer right there. So keep an eye on stablecoin regulation and issuance of stablecoins. Guys like JP Morgan, I met the CEO multiple times, great guy. Okay, they may issue a stablecoin as regulations now allow them to do. That will create a lot of money being pushed into the system. Money that they currently have to have in reserve will be able to be loaned out to folks, utilized by folks. And the more money that can be loaned or utilized by people, the more money goes into the stock market or other risk assets and sends those assets going up. Good question. Looking for question marks. How do you model deceleration of growth? And Gloria, it's quite simple. Okay. I don't model deceleration of growth. I model what's going to happen. So, for example, If the government planned on no longer buying Virginia and Columbia class submarines starting in fiscal 2028, I just go into my model and I type 0 in that model. Okay? And as a result of that, the revenue number, you might have noticed, changes because there's no longer getting revenue off of that. Okay? And as a result, you'll see a deceleration in these numbers. Okay? I'm not guessing deceleration, right? I am modeling what's going to happen, and whatever the numbers are, that tells me whether it's acceleration or deceleration. I didn't know what these numbers were going to be when I started this modeling process. That's the last thing I found out. The first thing I had to find out was, matter of fact, you see if this right here, this document I went through, this is government spending expectations for the next year. 121 pages of line items. And in here, you might have, I don't know if this will find it quickly. Let me see. There you go. Advanced submarine system development, tactical warfare systems. It tells you how much they plan on spending on these different things. Okay? And then I can use those numbers to build this spreadsheet, multiply it by the revenue they get for each of those things, which is also not easy to figure out because the company's not telling you. So you got to find sources, and then you just model it out. Good question. Next. See, and there's a lot of you traders out there that don't want to hear about this stuff. That's fine, but you're not going to become multimillionaires. Who are you looking up to? Who is the multi-billionaire trader? A pure technical trader, somebody who uses charts and became a billionaire. There's many of those on the fundamental side. So think about it. You can continue to have fun doing your technical analysis, or you can join the dark side and have the actual cheat code. Geodrill was your largest holding, but now it's Amplitude. Is this because Geodrill hasn't moved anywhere in 3 months? Zach, were you listening when I made Amplitude my largest holding? Because I said it was based on a trade, not on the rules. And one of the rules is don't do what Mark does, follow the rules. Right? That's one thing. Number two, I never make something else my largest position because something else is not doing something. Okay? Geodrill not moving for 3 months is meaningless to me, Zach. And it should be meaningless to you. Listen to me. I really need you to listen to this because that question tells me that there's something that in your mind, nothing wrong with you. It's been ingrained to you, something stupid. Something stupid has been put in your mind and it's not your fault. So I'm going to conduct surgery right now and extract that cancer out of your mind. Do not judge a stock based on what it's been doing. Because the second you sell is probably the moment that it will break out to new highs. It hasn't been doing anything for 3 months. I'm getting rid of it. That's exactly when I buy more. Because people get tired of the stock. I want in when people are tired of the stock. When a stock has been moving sideways, look at this. Look at this right here. Imagine the idiocy, the dummy that sold TPCS here, or here, or here, because it wasn't going up. Look, it's going up, I'm buying more. That's dumb, you keep buying more. We were buying here at 240, okay? And you keep buying more and more at 440? Bro, a lot of people just made 100%. And you're chasing us in. I'm not saying you, Zach. I'm saying a lot of people do that. And then, right, they bought it at 440, and then they watch over the next 2+ months as the stock does nothing but go down. I'm getting rid of this stock. It's a loser. Right before it takes off and goes to 6. Do not buy and sell stocks based on what they're doing. You buy and sell stocks based on where they are in the risk-reward channel. And by the way, because risk-reward channels move up, a company that moves sideways in the channel is actually gaining positive risk-reward. Does that make any sense to you? Let's see if I get a better, I don't know where to find a really good chart to illustrate this. I'm not going to do it right now. But the bottom line is, if this stock just goes sideways for a while, you see, as you go sideways, all that extra reward room starts to build in the chart. A stock that has a positive risk reward channel going sideways is becoming more attractive every day, not less. Next, VTSI chart. There's your up-to-date VTSI chart. Next question. By the way, anybody joining us late, trolls will be banned from the channel immediately. I give a lot of free value. I don't need to give it to trolls. I will ban you from my social media. You'll never see my social media posts again. That's to your detriment. Okay, just FYI. Do not pimp your stocks on my channel. It's my channel. Just little rules here. Give me the thumbs up. We are answering all your questions though, so put a question mark at the beginning of your question. Easy instructions, and we're going to answer them until the top of the hour. Sorry if I missed it, but with the renegotiation of contracts allow TPCS to improve their gross margins to 20%. More than that. Go listen to the earnings call. I'm hoping they can get their margins up to 30%. And by the way, bro, like, come on, man. Just like, I'm showing these things in the model on the show. I actually showed you this portion of my model, so you could actually have seen that right there. You guys have to learn to answer your own questions, to look at these things, to be observant in the world. Don't let somebody spoon feed you, because let's be honest, I could be some scammer, some fraudster. I had trouble with the SEC. Okay? We settled out of it. I didn't go to jail, but that doesn't mean I didn't do it. That doesn't mean I'm not back at it, ripping you guys off again, right? So that's why I teach you to be independent. Because what happens if I get hit by a bus? What happens if I'm really just tricking all you guys and all that, is smoke and mirrors? My entire this is conjured up, which is not, because it's been live. There's 7,000 people that have been watching me build this for 10 years, but right? You got a lot of other people that can make this bullshit up. You have to learn for yourselves. You have to fend for yourself. You have to trust yourself, because you can't trust anybody else. Trust me, I've been stabbed in the back by top 3 friends on multiple occasions in my life. Why? Because people value money over friendship and loyalty. Often. It's just the way it is. So be careful. Let's see what else we got here. Let's go into rapid fire mode here. I have a very dumb question. Why can't TSSI openly mention Dell? That's Dell's choice. Okay, it's Dell's choice. Mark, I popped in because I posted on your X page last night some news. Local media here in southeastern Connecticut is reporting that Electric Boat, in addition to purchasing the Macy's building, aside from, let's see what else, in the Crystal Mall, Waterford, Connecticut, is now negotiating to purchase the entire mall, which includes 3 more anchor stores and 700,000 square feet for space. I was a procurement specialist at Electric Boat for years. Whoa! I was wondering if there was going to be a question in this with the question marks, or if I was going to yell at you for putting a comment with question marks. But look at this. Look, this is what we need, folks. Adding value with information I didn't see yet. Thank you very much. Electric Boat expanding its capacity from a procurement specialist at Electric Boat for years. Right here in our audience, we have an independent, third-party industry expert that can help us understand more about the prospects for TPCS. So I would ask you, T-Train, are you positive on TPCS? We'll see in the comments later on. Let's see, is there anything else you got to say? Oh, and he's going to go to work. He'll catch us on the replay. T-Train, next week, let me know in the comments section if you're positive on TPCS. I would assume so, because he said he was a procurement specialist at Electric Boat for years and have never seen any expansion like this. That is unequivocally bullish for TPCS. T-Train, salute to you, my friend. If you are not in my WhatsApp groups, hit me up. Not the rest of you, do not hit me up. If you hit me up to get added to my WhatsApp groups, you will never get added to my WhatsApp groups. But T-Train, you can go to my contact section here of my website and write me, and we will add you to my WhatsApp groups if you're not already there, because you deserve that. I like people like you in my community. The rest of you don't. I will have an enrollment period, but if you ask me, I will put you on the blacklist. I'll have my assistant say, this person can never get added to my WhatsApp groups. Don't do that. Waste my time. As far as you know from the formal agreement with Dell, is there anything contractually that makes it more challenging for TSSI to acquire new customers than otherwise would be? That's a phenomenal question, Chris. No. Contractually, no. But it is pretty clear from the rhetoric coming out of TSSI that Dell kind of wants them for themselves. Dell wants their cake and eat it too. So, there's a lot of things that, even though it's not in the contract, Dell can make TSSI's life more difficult if TSSI doesn't go about this process in a manner that is acceptable to Dell. Okay? Shark Tooth, 8%. You're hilarious. By the way, make sure. So what you got? Let's see this. TSSI leads. It was 58.5. Let me see. 58.5 million. Come on. Here we go. Oh, it's 58.7. Look at that. All right. It was plus the over allotment. Let's double check that. 3.45 times 17. There you go. Boom. So it's 3.45 million shares that they issued. Okay. The new number, let's see, the old number. This is easy enough. Ticker. Sign in. TSSI. This is for you students out there. The rest of you, if you get bored and tune out, it's only going to take 10 seconds for this to be completed. Hold your horses. Shares outstanding as of the June quarter. Let's see. Quarterly data. It comes up. I'm going to look for the next question while that's coming up. TPCS said that as of June, they have a backlog of 50 million and expect to deliver it over the next 1 to 3 fiscal years with gross margin expansion. If closer to 3 years instead of 1, do you foresee this as an issue? No, Ben. That's not really how it works with them. Because they said on the call that they're at the front, middle, and end of the build process. That means that some of that backlog is at the front, middle, and end. Okay? So some of that backlog will be delivered today, maybe. Next month, for almost certainly. This quarter, almost certainly. Some of it next year, some of it the year after, some of it 3 years from now. Okay? It's a fine question. Nothing wrong with that. So let's see here. We've got, where are the shares outstanding? There you go. Weighted average shares outstanding. It was 25.6. Hey Siri, what's 3.45 divided by 25.6? 13.5%. So it was actually closer to 12 than 20. All right. So there we go. That clears that up. Just for anybody that wanted the actual detailed number. Okay. That's cool. Very cool. It's got to be fair. We got to be fair here. Next question. Dell is strategically and extremely competent in operating leverage. With TSSI's competency in producing and integrating data center servers, would Dell consider acquiring TSSI? I've gotten this question, Tim, many times. No, it would be a shock. That would defeat the purpose that Dell has for TSSI. Remember, TSSI is Dell's release valve. It's their overflow valve. Okay? If they acquire TSSI, now they don't have an overflow valve. Dell knows how to expand their capacity. They know how to integrate servers. They can do everything that TSSI does. Everything in air quotes. Okay? What they like about TSSI is that they can offload work to them because they don't want variability in their results. Dell is, like you said, they're very good at operating leverage. They're also good at operations. Wall Street likes smooth results, and Dell smooths its results by handing off volatility to a third party like TSSI. So TSSI, by necessity, is an external organization to Dell. Can you pull up and by the way, you wouldn't acquire them to expand their capacity either, because what TSSI has, Dell can build for about $45 million. And maybe a good, an extra, they got good CEO, they got a good COO, they got good HR. They've basically got all that TSSI has except for their capacity. So all they would be buying is capacity, which they can build out for about $45 million. Meanwhile, TSSI's market cap is not $45 million. It is close to 300. 400 because of the dilution of the shares. 400 million. They're not going to get bought out. I do not see them getting bought out by anybody, considering how much easier it is to just enter the business. Can you pull up and discuss your chart on amplitude? There's nothing to discuss, really. What do you want me to discuss? There's the chart. There's the trajectory that I see tentatively. You can see those lines are not colored in yet. So if you've read my article and watched my video, you know that these are my risk-reward lines. Okay? And this is all it is. They're operating on all cylinders. So the stock should be here, not here. I believe they are operating on all cylinders. That's the question you should ask, because the chart tells you everything you need to know as long as you know how many cylinders they're operating on. And me, dude, just read the last two transcripts. They're operating on all cylinders. Gatekeeper announced any thoughts on that? I talked about it. Oh, silent on the, they're silent on the MTA. It's not silent. They're just waiting for the contract to be done. You think all right, here's your contract, sign it. No, it takes weeks, months sometimes for these things to happen. Don't worry about it. They won a $30 million Canadian, $23 million US deal with the largest North American transit authority, New York. Be happy with that. Don't worry about when they not become silent about that. And I know that'll be a catalyst if they come out with news. We signed a contract with New York. That's not, to me, it's not news. I'll be excited because everybody else will know. But for the meantime, be excited that everybody doesn't know. GKPRF. There's your chart on that. All right. Looking at a $3 target over the next year and a half or so, stock sitting at 1. You got to learn to ask the right questions and think about the right things. You guys, too many of you are desperate to make quick money, to get rich quicker. Let me tell you, as somebody who got rich relatively quick, I pushed too hard. I didn't have to push this hard. Once you're rich, you can do anything you want. Guess what? You're going to be bored a lot of times because everybody else is at work. Okay? Do not rush it. Do not be desperate for gains. Do not, when are they going to announce a contract? I'm going to buy extra stock and try to make money on the trade. Don't break the rules. You dumb. That's not how you do it. I know that's how everybody else does it, but guess what? Everybody else is the 99%. You want to be one of them? Or do you want to be one of the 1%? One of the 0.1%? Probably. Come on, bro. Can you show the Gatekeeper? Well, that's the American version of the GSI chart. There's the Canadian version of the GSI chart. What are the VC podcasts that you monitor? A16Z comes to mind. I listen to the All In podcast. They have a good science section there. Those are the two main ones that come to mind. Is poor management a big reason for SNES not being an official pick? No. I am very super picky about making something an official pick. And I don't think management's bad there. I think management was bad there, but they've got new managers in place in recent years. I actually think they're pretty good. All right. And my colleagues agree. Okay. I can't tell you. There's always somebody that asks me, always, when are you going to make ABC an official pick? When I make it an official pick. What do you need to make it an official pick? For it to check all the boxes. What are all the boxes? I'm not telling you what all the boxes are. There's too many. For every company, the check boxes are different and numerous. Okay? I want to give you tens. And to teach you all the check boxes and stuff, it would take the same 10 years that it took my mentor to teach me what I know. Just so you know. Nothing wrong with the question. I'm just saying. I'm passionate in my answers. Have I looked at Radcom recently? Yeah, I look at Radcom all the time. It's just, They were more exciting when I made them a pick years ago, back around here. Those risk-reward lines have changed since then, by the way, because I made the call on the stock going from 10 to 20. But after all these years, you've had time for the competition to come in. They've got a lot of cash, and I don't see the stock tripling. It's not low-hanging fruit. There's better places to put your money. Hashtag better places for your money. Like I talked about earlier with Palantir, same story with Radcom. 99% of stocks are not worth your money. 99% of all stocks are not worth your money. Oh, we have an idiot. We have an idiot. Dude, you had your opportunity to delete this comment. EVLV, is it time to trim? That's the question of I almost dropped the F-bomb. Idiot, dummy, lazy, who can't read the instruction manual, who can't watch the instruction video that I put more effort to make than it would take to read and watch. I could put all that effort in for you, hours and hours and hours of effort to make that for you, and you can't take the 1 hour to consume it, dummy? And realize what 90% of the people on this video already know? Some of them probably told you, and you still didn't delete the question, so now you're getting called a dummy, a moron, an idiot, a time waster? Stupid. Is it time to trim evolve? What the F do you think it's time to trim evolve? Look at the chart, stupid. What an idiot. Wasting all of our... I'm sorry, everybody. This idiot is so lazy, so selfish, that he had to use 300 people's time to ask a question. I can't read, or I don't understand. I don't have a pen or a note. Shut up. Don't. And if you haven't seen the dummy treatment before, my friend, Mr. Dubs, don't take any offense. It's all part of the show. I'm not really mad. But you are stupid. Looking for question marks. Question marks. Yeah, I don't do crypto, guys. Just one more time, I don't do crypto. I don't believe in crypto for the most part. There are cryptos that are great. Bitcoin is digital gold. Ethereum, Solana, those are real. But would I invest in them? No, because for the same reason I wouldn't invest in a Palantir. Because you don't know where they're going. You don't know what they're worth. You can't put a value on those networks. I've made an attempt, and my best attempt at valuing those networks, it turned out to me that those networks are overvalued. I don't want to own Ethereum and Solana because I believe they are fundamentally overvalued. Now, does that mean they can't go up before you crypto heads get mad at me? No, 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 no. Because more and more people, institutions are, there's money being poured in. And like I told you, the most underappreciated factor in the movement of assets is liquidity. And there is ungodly amounts of liquidity being pushed into crypto, and God love y'all. I ain't mad at it. And that can keep pushing crypto to the moon. But I'm a fundamentalist. I would rather go to the moon with a stock that will see that same liquidity surge, but with the math on top of it that says this is an undervalued asset. I don't see that with the cryptos. That's why I don't even play with cryptos. All right? They don't issue SEC documents. They don't do quarterly earnings reports and all that. Come on. They're cool and all. They're exciting, but making millions to me is more exciting. All right. You touched on IntelliCheck's revenue. Any comment on the increased expenses? The loss increased. No big deal. I think we talked about that on the show. What the reasoning was for behind that. It's not a concern. It's not a concern. They're investing in their future. They got salespeople coming in. They've been putting money in R&D. Those expenses are going to shrink as a percentage of revenue over time. Not a problem. It's a fair question. Let's see. Question marks. Looking for question marks. What is delaying Forager from resuming its buyout offer for Quipt? I don't know. Maybe they're waiting for the next shareholder meeting. Again, this is a patience thing. You can actually ask AI. That's a great. I'm gonna defer rather to AI. Get Grok. Pay the $20 a month for Perplexity Premium. Pay the $30 a month for Grok Premium. Even better. Okay, I pay premium subscriptions for AI, and you can ask them these questions. All right, what could be holding this up? A number of things. I don't really worry about that, and I'm not paying too much attention to it because it's more of an M&A spec. Spec means speculative. I'm trying to I'd rather do work on Techogen that could be the next, official pick versus a Quip that will never be an official pick again, and we're just hoping that it gets acquired, which makes it speculative, which in a yellow alert, those who know the rules know the rules. All right, we're running out of questions, so if you got any questions, don't be shy, put it in there. Don't be afraid to be called an idiot. Let's see what we got here. And if I haven't answered your question yet, Mitch being the latest question, I see your question there. If I haven't answered your question yet, put it in the chat again because I missed it. Seeing that we're in a yellow alert, would you have most, if not all of your money in cash if you have a 401k that has no way to hedge? Anthony, I was trying to decide if that's a dumb question or not. It's really not a dumb question because, look, I follow the rules when it comes to stocks. Okay, so when I have a GKPRF and I see that they're operating on all cylinders, that means I believe that the stock is going from 1 to 3. I don't care about a yellow alert when I own a stock that's going from 1 to 3, with decent probability. Why would I sell that? Why would I go into cash? Why would I forego the opportunity to triple my money because I'm afraid, and yet, trust me, I'm afraid that the market might have a correction, because we're in a yellow alert. It might. So we got a might. Let's call it 50-50. There's a 50-50 chance that the market corrects and drags Gatekeeper down to 60 cents before it goes to $3. Now watch this. If it comes up heads, it goes down and then goes to $3. If it comes up tails, it goes straight to $3. It makes no sense to get out of this stock on a 50-50 bet that you might be able to buy it cheaper later because it's super cheap now. You're foregoing a bargain in hopes of it being a bigger bargain later. That's not what you do. You own the stock now, as I do, and you actually hope that it goes down so you can buy more of a good thing. If it doesn't, no big deal because you just made a profit. If it does go down, great, because I get to buy more at a cheaper price. As long as something doesn't go wrong, as long as the cylinders don't blow, we're just going to make more money taking advantage of the dummies out there that get scared out of stocks when they're afraid of the market. Write down the rule, my friend. I don't want to hear this question again. When you don't like the market, short the market, not your great stocks. Okay? As far as your 401k, I get what you're saying. What I would do in that case is make sure you get rid of everything that doesn't follow the rules. If it's not a gatekeeper that has that much room to go, if it's not an intermap that has an even intermap, relatively speaking, make sure your position size is, that's the wrong chart. Intermap, there it is, right? That has that much room to go, right? If it doesn't have these qualities, Palantir, Nvidia, Apple, Google, get rid of those in your 401k. If you want to take a hiatus, put it in your money market and make 4% and hope for a correction in this yellow alert. You'll continue to make, if the market goes up, you'll keep making money on the rest of your stocks, okay? That's how I do it. And yeah, it sounds crazy. Like I even cringe personally. Like deep inside, the old loser investor in me cringes a little bit at the thought of selling Nvidia, Google, Apple, which I did. I got rid of all of them, right? And they continue to do well. Right now, they're having a great day. Doesn't bother me because I'm doing the right thing based on my 30 years of experience, which is not being in stocks when they're at elevated levels. Only a bubble can really make them go materially higher. And if that happens, then I'm going to make a lot of money on these other stocks I've had. This is how I've made 40+% a year. This is how I make 7 figures a year. So even though it feels wrong, it works. And that's why only 1% make the big bucks, because it doesn't feel right to do what it takes to make the millions, right? 99% of people just do what feels right. And we're humans. So 99% of us all feel the same way about what's good and what's bad, what feels good and what doesn't feel good. It makes sense, right? We're humans, so we are human. You have to be a little inhuman. You have to be Mr. Spock to be great at the stock market, or at least act like him. Write down the rules and force yourself to follow them because you want to be a millionaire more than you want to feel comfortable. What's next? Mark, thanks as always for your show and good work. Thank you. Travel day here. TPCS sounded good yesterday. You're thinking about the balance sheet and the liquidity. It looks a bit tight. Of course, they have. What I think you're saying, if you look at TPCS's balance sheet at any given time, what you're going to find is that they have very little cash on the balance sheet. But if you listened to the earnings call, my friend Mitch, doesn't take long to listen to it. And I'm not holding you to it because you got more important things to do. You rely on me to do those things. You would see like, all right, here's your balance sheet for TPCS. Come on, TPCS. Cash is always low. Okay? They don't see much reason to hold cash. They've got credit, which they paid down this quarter. Okay? So they had cash, and they said, why should we hold cash when we have debt that we can pay off? Let's pay off the debt and keep our cash low. And if we need the cash, we can go and take more of that money off of the credit that we have outstanding. That's what that's all about. So that's your short answer. Nothing to worry about. NVTS chart. There it is. Nothing to see here. No lines, nothing. How's she running on cylinders? No cylinders right now. This is very speculative play on what happens. If you've missed the last few shows, you should catch up, please, because I've been, I turned, right? I was bullish on this company and now I'm not. I'm not bearish, but I'm not bullish anymore. Competition has come in. There's a time frame that we have to wait before this becomes relevant. They have an EV and solar business that aren't doing well. It's not low-hanging fruit. Okay, so in the hierarchy of moving its way towards becoming an official pick, this is actually taking steps backwards. IDN said that they got what do we got here? I'm looking for question marks. Here we go. Is there any large mid-cap that's even close to being an official or unofficial pick? Maybe, but I'm not going to tell you. That's I hate questions about is there what are your top 3 stocks that might be the next pick? Come on, bro. I frankly don't want to have an all micro cap portfolio. Geithner, that's your choice, but I can't help you from that. I'm the micro cap guy. I'm the small cap guy. I'm the guy that can tell you the cheat code, and Warren Buffett will tell you too. Warren Buffett actually said, you can look it up, that if he didn't become so rich off of small and micro caps that he couldn't buy them anymore, that he would continue buying them. The biggest advantage in the marketplace is in small and micro caps. You only buy mid cap and large cap names because you have to, is really what he was saying. Because the biggest advantage you have is in these smaller names. To me, Geithner, that's lack of comfort with being in what is the cheat code to becoming richest most quickly. No offense, because you are a good viewer on this show. I just want to let you know. Are you still close with your mentor? Super close with my mentor. One of them has passed away. One of them is still going quite strong and hopefully will continue going quite strong for decades to come. He's one of my best friends. How could he not be? He put me here. Technically, like I put me here, but he taught me how to get here. From a basement, not a basement apartment, a basement, paying $143 a month. I probably pay $143 an hour to live here. It's crazy. Beyond my wildest imaginations. How could he not be a friend? Thumbs ups. Yeah, we got Joe asking why there's not more thumbs ups. Yes, please give me the thumbs up if you've enjoyed this show. Do you know if TPCS has the capacity to produce more parts, or will they have to build more in order to get the increase? No. Yeah, Edmund, that's a fair question. I've answered this before. I believe that they have enough capacity to get to here. Maybe here. Okay? It's somewhere in the 100 million range that I think that it becomes a little problematic for them. And it's not problematic. It's easy. They just get another space. They put the machines in. They hire people that know how to use the machines. Don't worry about that. And by the way, that hashtag overthinking. Don't think too much about that. Okay? Adding capacity is easy for a company like them. I'm shocked you only have 5,000 subscribers. You should have 500,000 on YouTube. Thank you. But Mark, please do not put a question mark at the beginning of a comment. I would have read that comment later. Thanks, Mark. To clarify my 401k question, I can't invest in individual stocks, only ETFs. So most of the indices at all-time highs in yellow alert. That's why. Yeah, that's a problem, Anthony. I mean, I would shift. Go into money market or something, depends on what percentage of your net worth is in there. You need to get a financial advisor on that, because that's too much of a personal question. There's a lot of determinants there. Me personally, I took all my 401ks and all of my constrained accounts where I couldn't do something. If I can't do something I want to do with my money, I take that money out and put it somewhere where I can. Okay, so that includes brokerage firms. There's like Charles Schwab, Charles Schwab. There's certain things that they don't allow me to do. So I'm not going to have my money in Charles Schwab. I'm going to put it in E-Trade, which lets me do what I want. Interactive brokers lets me do what I want. Right? A 401k doesn't allow me to do what I want. So I want to liquidate that and put it in something else. If I can. If I can't, I want to speak to a financial advisor about what to do about that. Do you ever short pumps like what we're seeing in open right now? I used to. I used to short pumps, but then GameStop happened. And GameStop changed the world of shorting forever, basically, because GameStop basically made the business of short selling more of a game where you could have millions of people brought in to squeeze the shorts. So even if a stock deserves to go from 50 to 1, it could get pushed from 50 to 150 and you lose 3 times your money. I'm not trying to do that. So I've actually largely gotten out of the shorting game, and it's only on special occasions. Very few stocks do I ever short now. It's a very dangerous game, especially now. I missed your question about Quipt. Should we get out of it since it's in wait time? Well, it's not a wait time stock. It's a speculative stock. And I emphasized yellow alert. Yeah, technically by the rules, you would not really want to be involved in a speculative stock like Quipt or a wait time stock like any other wait time stocks that are out there. There we go. That's the 4 o'clock bell that just hit. And we're about to close out the show, looks like. But yes, Ben, the answer is that's what the rules say. Okay? I actually don't own any Quipt at this moment, partly because of that reason. I wanted to get my portfolio right. I don't follow all my rules because I'm human, but I tend to regret it. When I don't follow my rules, I tend to regret it like other humans do. So I sat down, I said, let me try to follow these rules as much as humanly possible. Let me get rid of the things. I don't care how uncomfortable it is. I want to make money, not be comfortable, and I got rid of that. Boom. That's it. Last question in the queue. Oh, we got one that just snuck in the last. How much do you think that the TSSI relationship with Dell affects them in pursuing new partners? Go watch what I said earlier. That question was answered. Okay. I don't think Dell wants them to get new partners. And I think there's stipulations, not written stipulations. And go watch the earlier part of the show so you can get the full analysis there. Other than that, Constructora starts the show. And I love Constructora. Salute, brother. Another person that has learned the rules from the first time that he came in here. I assume a he. He used to get yelled at. Now he doesn't because he decided he wants a pen. He wants a notebook. He wants the millions. He wants to learn how to become what I became. Because when you are somebody that was as low as I was, near homeless, and became one of the richest people on the planet, living in one of the most desirable places on the planet, you say, if a loser like that could do it, then I can do it too. And that's what I'm here to teach y'all every week, whether you like it or not. Every Friday at 2 p.m. It's Money Mark. It's Stock Talk Live. Have a great weekend. Catch y'all next week. Take care. Check out these comments.